All right, welcome back for another episode of Carnivore Trades. Today is Tuesday, November 14th, 2023. If you're not done so already, please give the video a thumbs up, like, comment, subscribe to the channel. Come find me on carnivoretrades.com for swing trading, alerts, analysis, and live day trading. Anyways, let's get into it today. So markets here up over 2% on the spiders, Q's up 2.3, Dow up 1.6, and the Russell up a whopping 5%. A lot of that coming from the KRE, which is up over 7% on the day. But nonetheless, markets having a huge surge. Now, this is a little bit of a surprise to me. I would have thought that we would not be up like this. So we are through that 444.50 handle. Usually when you're up 300 points in 12 days ahead of a volatility event, which is, the CPI, usually that means it's going to be, I would say 9 times out of 10, 8 to 9 times out of 10, it means it's going to be somewhat priced in, or the best is priced in. And a lot of the time it can be a sell to news. Now, I didn't think we would be down big. Sort of my base case would have been like slightly hotter than expected. Maybe a little dip in the morning and then kind of a buy the dip, and we just kind of hold up into OPEX. That was kind of my thought process going into today. Maybe a 4,400 pin. Maybe it get some bid up to 44.50, but I didn't think we would gap and go basically to the 4,500 handle. So that's where we are. And I talked about this in the short this morning. So max downsides like 44.85 intraday, and that's exactly where we went. And I said we've probably pinned between 4,500 and 45.05, maybe a move to 45.010. High of the day is 45.08. So again, it's been pretty much spot on from there. Just going off of the gamma levels, we did fill this gap at 45.05. The spiders I don't think quite filled. So 450.36, high of the day was 450.06. So maybe we see a little bit more upside tomorrow. There is a bond auction. It's only, I think it's just T-bills. So that can come out of reverse repo. So even if we have a poor auction, it's not necessarily going to be a huge headwind for the market. We do have expiration though, so that could be something that pulls a little bit of the underlying bid away. I think the upside, and I know I said this yesterday, but I think the upside for the week is probably about in. There is a lot of calls sitting at 4,500. That's probably going to be the cap. Can we inch higher? It's certainly possible. But that's just kind of what I see right now. And then I think we'll get some type of a mean reversion, some type of a pullback. I was just talking about about this to my members, and remember how oversold we were down here, and how the markets are oversold. We need to bounce. Well, there's your extension from the 20 MA, and look at where we are now. So this doesn't happen. 400 points in 13 days. Usually it's the other way around, right? Elevator down, stairs up, and we'll say this was more like an escalator. It wasn't quite the stairs, but it was kind of like an escalator, and now it's an elevator up. So big picture, near term, I think the risk is to the downside, to say the least. Again, the Qs might go and pierce double top. We're so close, they might go pierce it. But I think the risk here, at least over the next couple of weeks, is still to the downside. That does not mean that we're going to crash. It just means we would look for some type of retrace or a mean reversion, perhaps down to this trend line, back test that, maybe even down to the 433 area. So again, there's that's a possibility. I will say that, and I say all that to say this. This is the type of move that will bring in managed money, and it will make them panic because a lot of them have been on the sidelines all year in money market funds, etc. And what happens is if you're not meeting your benchmark by the end of the year, they're going to have to pile in. So which in its own right could be dangerous, but for the meantime, again, if we're looking for an end of year rally, which I do think we will get, I mean, we're already getting a big chunk of it right now, obviously. That's kind of setting the stage for that. Now, I want to say that and say something else too. So if we look at the macro of it, take a look at the 2 year. That's getting absolutely smart. Actually, that's the dollar. 2 years getting hit just as hard as well. Although still holding that pivot for now. You'd think that today, right? Okay, so basically the market's gone a sugar high because of Even Fed President Goolsbee said, it's likely now that, they're basically pumping the soft landing narrative. Like, it's likely now that inflation's going to come down. It's just going to come down like soft as a feather. Hold on, let me get a check here, because it's the check that the market's going to make here. They're going to cash this check. It's soft as a feather. And it's just going to slide down without the labor market breaking above 4%, which I think is just absolute nonsense. But that's what the market's up on right now. Now, if that's the case, then let's take a look at the yield curves here. So the 2-month 10-year, 210 is upticking. 3-month 10-year is down ticking. Does that make any sense here? So the yield curve is coming more inverted as things are supposedly normalizing, right? At least on the 3-month 10. That's something that definitely catches my eye. Now, does that matter in the near term? Absolutely not. But it's something we got to look at moving forward. So just some things to chew on while we're watching this amazing rally. And market's coming in a little bit here off of the highs. So again, I think 4,500 is probably a good cap for the rest of the week here. Again, we could inch up a little bit higher. We do have OPEX too. And by the way, I mean, market makers now, like I talked about the extension here versus where we are now, they're starting to get offsides to the long side. So they may be long too many calls. I know they're financing puts to sell calls right now as well. A lot of the time that unwinds into OPEX. So just be aware of that. But we are into a pretty good level here and we are overbought. So I think kind of near term, path of least resistance is likely down. Again, I could be wrong. Maybe we just gap up to all-time highs, but that's just kind of the way I see it right now, at least going into the end of the week. We do have PPI tomorrow. I doubt anyone will care, but that is something maybe that causes a little bit of a pullback. Again, we talked about the Qs going into double top. Again, maybe we do inch up a little bit higher. Microsoft actually almost went red today. That was interesting there. Putting in a little bit of a hanging man, as is NVIDIA. Again, I think NVIDIA gets pinned to that 500 handle. I don't see it getting much above that. Again, whole round number in an OPEX week. But in any case, Qs, double top, that's your obvious level there. And, it's slightly off the highs. We'll leave it at that. We are leaving some fat gaps here on the chart, too. Just be aware. Dow here up 1.3. Coming off the high, that exceeded my targets as well. I said, 345, maybe up. I think yesterday I said up to the red bar high, 347. We can actually get rid of, let's extend that out because that's now the low of the day. So we can get rid of this. We can get rid of that. Again, here's your kind of breakdown area. Look on the weekly. So bear flag, breakdown. So we're into that level now. Again, it might stall out here. But nice move for the Dow, and it's pulling off the highs. Now, the big winner obviously was the Russell up 5.5 or 5 1/3. Big move up. That can get to 180, maybe 181, right? There's your 200. It probably wants to get up there eventually. Big breakdown level, 200, 100 MA on the daily. Then you've got a gap fill at 179.86. So that's likely your next level. Look how it gap above the 50 moving average. That's a bullish sign on an intraday basis. So when you gap above a moving average that is resistance, it's usually going to give you a bid. You got good volume there. This is an amazing gap here, by the way, for the Russell 2000. Again, the KRE making up a large chunk of the Russell helps that out a lot, up 7.3. And I'll talk to you about home builders in a second and kind of visualize what that means for the market. But Russell 2000 getting a bid, SMH up 3%. SOX nowhere near the highs, though. That is into resistance. That looks a little top heavy here with this pivot. And then the breakdown selling wide range bar. Actually, we can use SOX or double X. And you can see the volume uptick there on the sell. But in any case, looks a little extended here. Remember, NVIDIA earnings next week. IGV, that's the powerhouse. Little hanging man, so could be something, could be nothing. But I did some work on this already, and about 395 is going to be your next level on the IGV. This has been kind of one of my favored sectors this year. I talked about that being strong. Cloud, a nice pop there, 1, 2, 3 up on the weekly. And I think 395 is a good level. That's your weekly breakdown area, right in that area. Overshoot to 400 for sure. But IGV holding up again, hanging man there. So just be careful. There's a gap to fill. It could come back down. but it looks okay for now. Dow Transports, again, we talked about 14.8, and we got up to 14.932. We pulled back. There's your 200 and your 50, right? It's very simple, very easy to see. Anybody could have seen that. But the next big level is right up here. So this breakdown, pivot high, you back tested that breakdown, couldn't get above it. That's going to be your level there on the DJT. Doesn't mean to go in there a straight line. It might have to consolidate and go up. But that is the big level. I'm watching my jets, which I'm underwater on those calls. I'm getting a nice bid there, and maybe that can get back to 17 for me. But transports here getting a bid. All right, interest rates here. We'll just briefly cover that. So there's the 2-year. Got to get through this pivot, then it can get down to 4.6. Right now, everybody's bearish rates. I'm not in the long term. You guys know that I recently was saying, making the case for the 30-year to come in, and it has. And now everybody, loves the TLT. I said as recently as yesterday, though, I thought we could get back to 5. That obviously is not the case here. Honestly, the 30-year not down as much as it should be on a day like today. But short term, 4.4, right in that area. You guys know the level. Same thing with the 10-year, 4.35. That's the level we're looking at. And that should be support. If you get through that, it's down to 4%. A lot of people are in the camp that yields are going all the way back to 1. I'm not in that camp. 5-year here, we'll say short term can get to 4.2, and we'll leave it there for now. XHB. So this is, again, kind of interesting, right? So the reason home builders are coming down so much is because the market was finally starting to get it in its head that the Fed was going to not back down, right? So higher for longer, right? That narrative. And the TYX here really started to break out in that July, August period, right? It's not a coincidence that's when the home builders started putting in that rolling top and then started to sell. Now the home builder, the XHB up 6% in a day, this is not something that is supposed to happen, right? The XHB is not supposed to have this kind of volatility in it. Again, just going back to what I was saying, this is basically saying everything's fixed, right? And if the 3-month 10-year is continuing to invert further, it's just, something to consider. Right now, you're above these resistance levels. Next pivot is at 82.70, 82.80. So we'll give it the upside bias there, but just some things to consider as we look at this market moving forward. Even VNQ getting a nice day up 5.5. all the way to the 100 moving average. We're back above this trend line here. So weekly close will tell us a lot more on that. If we close back below this trend line and back below the 20 week moving average, again, it's just telling you that it's continually weak. Right now, though, next big level here, you got the gap window and then the gap fill at 80.84. But VNQ getting a nice outside bid there. Market's close in about a minute. XLF, again, overshot my level by a little bit, but look at where we're about to close. So I told you guys 34.50, and it overshot it intraday, but now we're pulling back and it looks like we're going to close, maybe slightly below that as the markets dip down. Again, look at this, right? So you had an up move, and this was trying to be bullish consolidation for another push higher, like a little zigzag, and that failed. So that's where the sellers are going to come in. And that's why we're seeing XLF pull back. Again, lots of gaps here. I don't like that. But it's having a big up day. KRE, I think the 200 is pretty good resistance here in the short term. If it can consolidate, it can go to 48. If not, it needs to come back and fill that gap. On the downside, KBE is above its 200. There's still a lot of resistance at 40, though. But again, if it consolidates, it can push up into the 41, 42 handle. XBD, so nice outside move. Again, where is it going? You guys know it went to 490, and that's where it pulled back from. If it can consolidate, it can go to 500. Let's keep it simple there. Crude, this is a good technical example here of how charts work. So we talked about this level. Talked about the 618. We hit it, and I said I still don't really love it that much, even though we're bouncing yesterday. And there's a closing bell there. So market's pulled back a little bit off the highs. We'll cover that in a second. But take a look at this trend line again. 1, 2, 3. We grinded on it, broke it. Was resistance. We broke through it, back tested as support, and then we sliced through it again. And now look where we went today, right there, and then ended up closing red. So just back above that 200 moving average, but not confirming above yesterday's high to really confirm that breakout back above the 200. And I talked about that 80 handle being kind of, your next level. That's where it went and it pulled back. So interested to see where this closes the week out. But crude definitely on the softer side and was green. I thought this was interesting. I was talking about it in the trading room earlier. I was like, wow, crude is, look at the time that crude pumped at, 8:30, right? That's when the CPI came out. So there was even short covering in crude, even though we had a cold CPI. So very funny to see that. But in any case, markets crude pulling off that level. If we break this level, it's down to the low 70s, upper 60s. If we can get back above this bar, then we'll talk about upside prices. But I'm not sure that is really going to happen. XLE managing to be up 89 basis points. Couldn't really get above the 200 MA though. I don't really like this chart. It's just up because everything's up. Everything else is up. Again, still short term. Kind of got resistance at 85, 86 anyway. But again, it's a green day. We'll leave it at that for now. XOP getting a bounce as well. Still got resistance at the gap fill. OIH, you guys know I like this one out of the best, or the best out of the three. But short term, 330 is resistance. You get through that, it's up to this trend line. And so nice bounce there for those energy plays. CCJ up another 78 basis points. That is still fine. The trend is up. It can go higher. URNM, that's fine. The trend is up and can go higher. Nat gas pulling back in today. So got the bounce off to 50 yesterday and then pulled back in. Nothing really has changed there. Still looks like a weekly base to me. Dollar index. So here's another thing too. Another reason for why I think path of least resistance is to the downside. So we've been talking about these levels. By the way, daily inside bar, nice rollover. So that pattern won out. But the dollar index, and you never got above that 50 and 20. Notice that too. And then we kind of just rolled right over. This is a massive move for the dollar, down 1.5. So we're not going to see this type of move very often, but you are coming into some levels. So we talked about 104.50. That got sliced. 104 got touched and bounced. This is the level I really like, though, 103.50. So in addition to these pivots and then this little chop zone, you got a 200-day. And if we go out to the weekly, you're going to see the 100 and 50-week moving average right in this area. So again, we're not that far away. It's only 50 cents. So I think if we start to inch down on the DXY and that level holds, you start to get a bounce on that. It's going to, pull the markets in. So that's kind of what my short-term thesis is right now. But watch those levels there on the dollar. Big move. I mean, it's kind of like a historic move. I don't think there's that many days in history where the dollar is up or down 1.5 in a day. The market normally doesn't like instability like this, but right now it likes it because the labor market isn't cracking. If the labor market starts to crack, it will not like the dollar being down that much in a single day. But that's not the case right now. Gold here having a decent day as well, although it came off the highs, up 88 basis points. You'd think the gold would be up more, but a lot of the move today was risk on. So you could argue that, okay, well, we're not putting our money into a safe asset, we're putting it into the Russell 2000. I believe Kathy was up big today. Yeah, Kathy up 5%. So we're kind of seeing those risk on plays get a bid. That sort of explains it for gold for me right now. Silver up 3.6. Interesting, right? So if CPI is coming back in, this has an industrial component to it. Silver getting a bid here. Maybe just a lot of shorts in it and you're seeing a squeeze. But nice pop there for silver. Weekly, it looks a little bit better. I'm still not in love with it, but nice daily candle there, and it had a pretty good outside move. Platinum also getting a nice bid. I think the lows may be in on this one. Waiting for pattern on that. Up three and a third, so nice move there. Palladium up 4%. We'll see how that reacts at 1065. And then copper, lastly, that was green today, but pulling back in off that trend line again. So it keeps tagging it. 1, 2, 3, 4 hits, pulled back in. If it takes out this pivot, it's headed down to 340. So all right, Bitcoin here. So that did pull back a little bit today. Two things that could be going on here. One, it's overbought. It was going to pull back anyway. I mean, if you didn't think that was going to happen, I got news for you. But anyways, it pulled back here. One argument could be that, you're just seeing rotation, right? This has had a big run, so profit taking there and rotating into things like Russell, and other areas of the market. Another explanation could simply just be that they're trying to shake people out before the ETF news. So something to consider there. But Bitcoin did take a hit, down 3%, not crazy, considering the move that we've had over the last month or so. And look where we went, right into this previous trend line, little previous channel. If that breaks, it's down to 33.3 or 33.4 rather. If that breaks, then you're down to this 31 handle, 31.5. But right now it is pulling back. I think it holds up until the ETF personally, but it did pull back here today, and really all the alts are down as well. Ether coming in, Doge, Polkadot, Litecoin, XRP. That had a big outside move yesterday, then came all the way back in. So crypto coming in. We won't make too much out of it right now, though. All right, lastly, so let's take a look at the spiders again. So finishing up 1.94%. So we came off the highs a little bit here before the bell, as you can see there with that micro fade. One other thing I noticed too, this is why I think we're also going to go down. Take a look at the VIX did into the final 10 minutes and really all day. The low was put in the first tick of the day pretty much. And we inched up all day long. That means that smart money is buying protection here. The VIX actually down 4.4, but it did come off the lows. It does look like smart money is buying some volatility hedges here as they are getting really cheap and the markets get more and more extended. So just something to keep an eye on there. But big picture, big move for the market, up 2% on the day. Triple Qs again. I could see a little bit more upside tomorrow, maybe even a gap higher to hit that double top. But I do expect 4,500 to kind of be a magnet pretty much throughout the rest of the week. We'll see. Tomorrow we have expiration. There's a bond auction at 1 o'clock. I don't know if that's going to mean a whole lot. We have, that can come out of reverse repo. It's short-term T-bills. So we'll see how that works out. Maybe it's a dead cat bounce for yields. But either way, we'll watch this level here going into the end of the week. And pretty epic rally. Lots of gaps to fill on the downside potentially. But big move there for the market, and of course we'll just leave it at that. So anyways guys, gonna wrap it up here. You guys take care. Come find me on carnivoretrades.com. Talk to you guys all tomorrow.